Welcome to Momentum Monday. Today is October 3rd, 2021. Howard, what's going on? Where are you right now?
Can't tell you. It's top secret.
Top secret, yeah.
Two guesses.
Miami is number one.
You read my blog.
Where else would you go?
What's going
to your
on?
needs, where all the retired people go.
I'm telling you, I feel like it's the only place I go where I feel young.
That's true.
You can push people down here and run away and no one can catch you.
Yeah, I can see that.
It's a lot of people wearing bright yellow and bright orange too.
They should.
I think you'd like it here. There's a lot of volleyball.
Oh, maybe I should visit.
So take it away. What's going on out there?
So what's going on? Definitely an uptick in volatility last week with a couple sell-offs in the S&P 500, in the Nasdaq 100, as interest rates hit a pretty decent spike. You can see that sell-off here in treasuries, which moves in the opposite direction of interest rates. So this definitely impacted tech stocks. Many software names, had a 10-20% pullback.
Mm-hmm.
So that's one side of the market. The other side is that the so-called recovery stocks continue to lead. And we're not talking only about crude oil, oil and gas, energy, which is near 52-week highs. A lot of strength in the sector. I mean, most of those names move together anyway. So you can as well just own the ETF or one of the leverage ETFs instead of trying to pick stocks in the energy space.
Mm-hmm.
But all of the so-called reopening stocks had an extremely strong Friday after Merck's announced their pill that supposedly decreases hospitalization levels by half among older people with conditions, which supposedly means that it would work a lot better on everyone else. So anything from airlines to hotels, anything connected to the reopening was extremely strong and is definitely leading currently the market. The market is currently saying that maybe COVID is not going away, but we are slowly figuring out how to deal with it better. And so all of those hotels, leisure, restaurants, definitely among the leaders currently. Strength on Friday. We'll see if there is a follow through on Monday. And the third big theme from last week is retailers were hit pretty hard. I mean, on last Thursday, XRT was down almost 5%. I mean,
because of Amazon or because of a full retailer?
Well, the main reason is that they're mentioning is that supply chains disruptions.
Got it.
Bed Bath & Beyond reported earnings. They said, the sales dropped significantly. They cited supply chain disruptions. Then Bank of America downgraded Kohl's, citing the same reason. And then you know how the market works. It extrapolated the same weakness in the entire sector. So as I said, XRT was down 5% in one day on Thursday. This doesn't really happen often. But then keep into account that earlier in the year, that same ETF had a gigantic move, mostly thanks to GME and other meme names.
Mm-hmm.
So maybe it's due for some mean reversion at some point. So these are basically the three themes: interest rates, and which are spiking and therefore hitting momentum tech stocks, the reopening names leading, and then retailers starting to getting impacted by all the supply chains disruptions around the world.
Yeah, I think the supply chain thing is real from all my checks of just talking to traders. So that finally came into, I mean, all things considered, retail's doing well, considering what I'm hearing are nightmares in logistics and freight and ripoffs and shipping. You can see the change in FedEx. If you pull up FedEx, it's been a kind of a disaster. But if you look at the last miles, as I think we talked about it last week, Uber or DoorDash, anybody in the last mile is unaffected. And actually, DoorDash, I think, is having a day. Yeah, it's pulled back a little bit.
It's a momentum stock, so obviously it's going to pull back when interest rates spike. I mean, obviously interest rates had a big spike last week, but historically they're still at a very low level. So we might see something similar to what we saw earlier in the year in May, when after 20%, 25% pullback in many of those names, they just set up again.
I think the one stock that continues to gonna surprise people is Netflix. As you'd think it would be the opposite, as we're reopening, no one would watch. Maybe there would be the pullback in content. I think we're going to see the content improve and people will find the time to watch these. I also think, and then what else is interesting is some of the false breakouts. We saw Lulu, which I dropped from my 8 to 80 just based on competition in what I see from Vuori to Alo to Peloton. And I think it'll have a tough time, even though leisure is not going away. There's just so much competition. Yeah, Nike pulled back right to its breakout point. That's really interesting. But again, if you're thinking of a company that's going to be hurt by China and supply chain, that would be Nike. So if you look out broader, it's still an incredible uptrend, Nike. So is Lulu, but a lot of competition. They've had great runs, pretty much priced for perfection. And I think China affects them. Lulu is going to rely on growth over there in Asia, and it may not be as easy in the Z world that's going forward. But I think content, great. I don't know what else. I haven't been following stocks. There's a mini bear market in a lot of tech stocks. One of my favorites, Cloudflare, just gave up a quick 20%.
This is normal for momentum stocks.
Yeah. So it's not, there's a classic rotation going on. Just when it looked like some of these leaders would never stop, from Facebook to Snapchat to Cloudflare. I'm trying to think what else kind of reversed hard. Nike reversed hard. How's Crocs doing? Crocs is one that's avoided any pullback.
I mean, all of them are going to pull back. Obviously, as a retailer, and they're going to pull back. It's part of the same theme, stocks moving theme. And if we go back to Cloudflare real quick, look at this pullback in May. It was the same reason when people were talking about rising inflation expectations and rising interest rates. This is when exactly for a couple of weeks, all the momentum names pulled back about 20%. And as you can see, many of them set up again. So maybe this is not the end. Who knows? Maybe they just need more time to set up again.
A little bit interest rate related, a little bit valuation related.
Definitely anything related to energy, commodities, and rising inflation expectation has been doing better than the rest. It's not just oil. We see strength in coal. For whatever reason, coal and gas prices, as you know, are up significantly. Here's an ETF, BOIL, one of the best performing this year. But also, as I said, coal, also fertilizers, which is also kind of inflation play in a way, are starting to break out. I mean, they've been breaking out for a while. Here's Mosaic, CF as well. So definitely the inflation theme is playing out, and which is, from a big picture perspective, it's normal in a bull market to see some sectors do really well while others are suffering, because as the saying goes, one sector rising costs is another sector rising revenue. So it's completely normal in a bull market to see a market of stocks, some doing better than others. Typically all of stocks move together only during market corrections, when there is panic selling and then panic buying. So when we see a market of stocks, it's normal. What we're currently seeing is normal, yeah.
I was looking at some of the best relative strength stocks. The one that was interesting was the Celsius, CELH.
Yeah, definitely. Yeah.
Calorie burning soda. Pull up
It's just
the
another energy drink. I remember they were giving them for free, like what was it, 2, 3 years ago before the pandemic. They came to my F45 gym, they were giving it away for free. It was like, what, a $5 stock. I should have bought it. Didn't pay attention.
the marketing genius.
Look at it.
Advertising says that you drink it and it burns you burn calories. That's really good marketing.
Yeah.
These things have a tendency to just get
For
caught.
a long time, they went nowhere, and then during the pandemic, look what happened. I mean, this is what liquidity will do.
Just a reminder that you got to keep your eyes open. Missed this completely. Wouldn't have probably bought it anyways. And these things always end badly because there's going to be competition up the yin yang. If this is a true, I don't know how they've gotten away with it. What's the market cap? I just went to their website.
7 billion already, but it used to be 20 times less only a year and a half ago. So
yeah, so they
tiny company.
They're one of the big pandemic winners. Another one, InMode, plastic surgery, dermatology products.
Yeah, very volatile, but definitely one of the leaders. Also, a firm holdings. One of the leaders holding its breakout.
Yep. So there's leaders out there. It's a stock picker's market. You have to be able to kind of.
Yeah, there's something for everyone. There's something for everyone. As I say, if interest rates continue to rise, which for now they've stabilized, we might see more momentum stocks pulling back, especially software names. And even there, some of them are acting better than others.
Yeah.
But the next earnings season, I think, starts in 2 weeks. So it will be interesting to see if tech stocks will be able to surprise again. Obviously, expectations are high, but they keep surprising every quarter.
Yeah. All right. Well, we're back next week. Got through our first 5% pullback of the year. The indexes are still doing great on the year.
Yeah, small caps are lately doing a little bit better.
Crypto's kind of recovered from the latest China scare, and
yeah.
So there's a lot working still. And there's a lot of money sloshing around. So it's not just coming to the sidelines. It's just rotating around.
Just rotation, yeah.
All right. Well, we'll see you next week. Have a great week, everybody.
All right, Howard. Next week.